Well, let's go on and get started. Welcome to Forex for Beginners. We do this class once a week, and it's really just to get your questions answered, to cover some of the basics. Sometimes, Forex can be a little bit intimidating. And so we want to give you a nice, comfortable environment to just learn some basics and just to help you out. So I always brag about Coach Max's 2-week syllabus and everything that she's put in the back office and in terms of the live classes as well. And then we're a part of Dynasty Exchange, which is Coach Max and Ryan's downline. So make sure you're plugged into the Dynasty Exchange Facebook group and the new Telegram links that Coach Max sent out via email. And there's a full schedule of Dynasty Exchange classes happening all week long. And, we are under Domo 30. So we are impact over profit. So it's just another layer, just lots of ways to learn. It's a wonderful trading community. So what we're going to be doing and what we've been doing for the past few weeks is bringing up TradingView and just showing you where to start. So before I forget, each class is recorded and uploaded to my YouTube page. So let me make sure that I paste that in the chat in case you don't have it. And I'll have this class uploaded by tomorrow, normally around noon, and I'll send it out in the ILP chats. But let's take the vantage point. Let's say that you're taking the Epix Forex signals that come out, and let's say a signal was just posted, and maybe you want to do some analysis on this signal to maybe decide, do you really want to take it? Is now the best entry? So we're going to pull up TradingView and just tell you how to get started. And then since we have, just an intimate class, you guys can come off mute and we can talk and can answer any questions that you have. So let me share my screen. And I'll try to keep an eye on the chat. And let's go to Forex pairs because we want to start with some of the beginner friendly pairs. So what you're looking at is TradingView, and here on the left is where you type in the Forex pair that you want to analyze, Euro USD. And then the next thing you do is choose a time frame. Now, when you do that, TradingView gets a little mixed up. So just right click, reset chart. And now the chart looks good again. I'm going to delete that and show you that in a second. Okay, so we're looking at Euro USD. Now, my colors have been adjusted. You're probably familiar with the bullish or increasing candles being shown in green and the bearish or decreasing candles shown in red. So let me show you how I did that. Right click anywhere on the screen and go to settings. So the body of my up candles are this, the color is this blue sort of teal color. And my bearish or down candles are this purple color. So I think it's really cool with TradingView. You can customize your chart to make it to look however you want. So my blue candles are going up and my purple candles are coming down. Now, in terms of indicators, we only have two because we want to keep it kind of nice and simple. We'll probably add some later, but we just want to make sure that everyone in the ILP community is comfortable pulling up a chart in TradingView and be able to do some beginning analysis in terms of taking a trade. So we are looking at the 50 moving average, and I'll write that here. So in the teal color is the 50 EMA, exponential moving average. We'll put it in the same color. And then the yellow one is the 200 EMA. I'm going to make that orange just to make sure you can see it. So these are the two moving averages that we have. I want to show you how to add those to your chart. I like this Forex LG EMA setup because if you're on the free version of TradingView, you're limited in terms of how many indicators you can have. So the cool thing about this indicator is that you can have lots of EMAs with one indicator. So you would come and select this FX icon. It says indicators and strategy. And you're going to type in 4XLG. And this first one here is the one that we want. Forex LG EMA setup. So just click there on that blue and it's going to add it here to your chart. Now, for these icons, this eyeball, that will hide it. So you're not seeing the indicator. If ever something is blocking a view of a candle and you want to just temporarily disable the indicator, but it's still on your chart, that's why I use that eyeball. So that can just hide it. And then the settings, if I go to style, you'll see that there's a possible 1, 2, 3, 4, 5, 6, 7, 8 indicators that you can show. We're only going to choose the 50 and the 200. They have nicknames. The 50 EMA is known as the water. The 200 EMA is known as the mayo. I don't really know the backstory on that, but under inputs, so it was the fourth and fifth one. So here, the length of our moving average is going to be 50, and the other one is going to be 200. So that's how you add the 50 EMA and the 200 to your chart. Now, in the chat, or come off mute, if you're clear about how to do that, let me know. Or if I went too fast or I need to review that part again, let me know in the chat. Put a 3 in the chat if you have a question about how to add the 50 EMA or the 200 EMA to your chart. So a 3 if you have a question or if something wasn't quite clear. We want to take all the guesswork out of this. We want to show you how simple it can be just to do this beginning analysis. Okay, no 3s, so I'll take it that we're good. So we're in TradingView. We've pulled up Euro USD. We're on the 1 hour time frame. The 1 hour time frame is a great place to start. It's not as large as maybe a 4 hour or daily time frame. And it's not as small as maybe a 5-minute or a 15-minute time frame. So the ones that I've mentioned are all kind of the popular ones, but the 1 hour is kind of, just right. Not too big, not too small. And it's a great place to start if it's the beginning of your analysis and you're trying to see what's going on with your pair. We all recommend that you have a couple of pair that you choose to study. You probably want to, it's fine to just have one. Sometimes your one pair may be in heavy consolidation and you may not see a trade, all day because it's in consolidation. So in cases like that, it's great to have, another pair that you can pull up and maybe see some more action. Maybe, the best time to take trades are when we're in a trending market, like the beginning of a trending market. So if you're studying, if Euro USD is your one pair, and it's in heavy consolidation, if you have a backup or a second backup, then maybe you can have something that will give you something better to analyze. All right, so we have our 50 EMA and we have our 200 EMA. And the general rule that we follow, maybe you guys can tell me in the chat, when price is below the 50, are we looking to buy or sell? Awesome. Hey, Trish. Yes, we are looking to sell. And obviously, when price is above the 50, we're looking to buy. So, that's the main place to start. Once you pull up your pair, you're on the 1 hour time frame, you have your 50 and 200 EMA on there. Let's look at price. Is price above the 50, meaning we're in an uptrend and we're looking for buys? or is price under the 50? And in that case, we would be looking for sales. Now, let's look at current price right now with Euro USD. So in this area, you can see that the 50 practically all day has been kind of climbing like through the candles. We had a little bit of an uptrend here, but for the last few hours, and I don't know that we've talked about the time frame, so let me point that out to you. As I move around on TradingView, the black box at the bottom has the date. So I don't know if you can see it, if it's big enough, but where I am now, it says March 12th, 2021. The 21 is for 2021, and it has 11 a.m. Now, this is Eastern. This is set for my time zone. So this time indication is very important in TradingView. So for one, you can see how price moves within the different sessions. We know New York session is 8 a.m. to 5 p.m. Eastern. We know that London starts next about 7 p.m. to 2 or 3 a.m. Then we know that's the start of the London session, and that brings us full circle back to New York. So as you're studying your pair, you're going to notice that it moves the most typically in 1 to 2 sessions. So if we're looking at Euro, that's in Europe. So the London session is when the Euro typically moves the most. And so Euro USD, obviously the New York session is where the USD pairs move the most. So if Euro USD is your pair, you're going to see the most action during London session and during New York. So, we've been learning, especially with Jojo and his market maker theory, that the Asia session is, typically consolidation. We don't see a lot of large movement. However, you do, if your pair is USD JPY, JPY is an Asia session pair. So you're going to see maybe some JPY action in Asia. So we were talking about looking at the time frame. So from about 2 o'clock today till now, the 50 moving average has been running pretty much through the candles. So we're not really in an uptrend. We're not really in a downtrend. We're just kind of hanging out, kind of sideways, kind of consolidation. So, for beginners, this is pretty much a no trade zone. Even if you're advanced, this is probably a no trade zone. Intermediate, we make the most money preferably in a trendy market. So if you notice here, so this TradingView says this was at 9 a.m. We had a slight uptrend. We broke away from the 50. Price moved up to just above the 200 before it came back down. Okay. So the one thing that we'll do as we study Euro USD is we're going to mark our zones. And we definitely want to see, here are our notes from before. Beginner friendly pairs, as well as when price is above the 50 EMA, look for buys. When 50 EMA crosses to 200, oh yeah, that's also what we've highlighted before. You can look for buys as well. So likewise, when price is below the 50, you're going to look for sells. And when the 50 crosses under the 200, take a look at the pips here. Here we had, let me use my arrow. Check this out. Here, the 50 EMA crossed below the 200. And so that would have been a nice trade to take here. It came back and checked the 50, crossed back under, and had a nice drop. So this is an example of taking a sell trade when the 50 crosses to 200. And of course, when you see the candles cross back to the 50, that would be the time to get out, if not before. And also when price is just breaking below the 50. Look at that nice trade. And when you're beginning to look at your trades, some may be comfortable, just going for 20 pips. Others are more comfortable with an intraday or swing trade where you hold that trade. Remember, we're on the hour time frame. So each one of these candles is an hour. So if you were patient enough, if you're the type of trader who doesn't mind holding trades, then eventually when it retested the 50, you got a nice big drop. And there's no right or wrong answer. I tend to be a scalper. I love to get my 20 pips, as Coach Max taught us, 20 pips and dip. I love to do that. I love to scalp the market. Others don't mind holding the trades. So there's no right or wrong answer. Play around in your demo account and just see what feels better to you. So let me ask in the chat if I can get to it. There we go. So put a 1 in the chat if you prefer to scalp. I'm going to just take a quick poll from our participants and place a 2 in the chat if you're okay with being in a trade for a few hours. So a 1 in the chat if you want to scalp, minutes, 30 minutes, get a nice scalp going. Yeah. A 2 in the chat if you don't mind holding. All right, Mel, we got an intraday trader. All right. Now I want a 3 in the chat if you are a swing trader. And that means you can start a trade on Monday and you're okay holding it till maybe even Friday. Any swing traders on the call? Anyone with that enduring patience who wants to really maximize their trades? All right, nice. So we have a good mixture. Mostly scalpers. That's me. I don't mind the intraday trades. Um, I'm growing to be a swing trader. I think that's going to take some time for me, but we have a few more minutes. Let's talk about some of the advantages of each. Now, if you're a scalper, I definitely can speak to the advantages of scalping. One, you make your money fast and you are out of the market. If there's a big news event, if the president speaks or makes a tweet and the market just goes crazy, when you're scalping the market, you're less likely to be impacted by that because you are in and out and you have your money and you're gone. So I guess the only disadvantage of scalping is that you can get into a trade for 20 pips and eventually that same trade can go for 200 pips. So we tend, those of us who scalp, we leave pips on the table all the time. Personally, I don't have a problem with that, but I think we should note it as a disadvantage. Not necessarily negative, but it just means, there are pips left on the table. So for intraday trades, you may be in a trade an hour, maybe a few hours. Typically, if you're intraday trading in New York, you may open a trade 8 or 9 o'clock, and maybe by lunchtime or 1 or 2, you are out of that trade. So the advantages of intraday trading, I think the biggest advantage is that you have a chance to gain more pips over the scalper. The scalper got their 10 or 20 pips, they were out of the market, but it was the start of a trend and price can go hundreds of pips. So being in the trade a few hours, you're able to gain more pips potentially. Now, one disadvantage of intraday trading, obviously you have to watch the news. Anything can happen in the market at any time and your trade can, turn around the other way. One mental challenge that I've noticed with intraday trading, take a look at price here. You have to be comfortable with pullbacks. So if you're in the trade for a few hours price can, and this happened to a trade that I took today. I was in a GU buy around 7 o'clock. I knew there was a big news event coming for USD pairs about 8:30, but I wanted to see if I could get my 20 pips before that news event happened. So what happened, my TP was 20 pips. I got up to 15, price went all the way back to entry. And then eventually it hit my stop profit. I got back in and later it hit my TP of 20 pips. But if you're in a trade for a number of hours, you have to mentally prepare yourself for the ebbs and flows. You may be blue, and then your blue may decrease as you hit a pullback. So you have to have the stamina to say, I believe in this trade. I know this is just the ebb and flow. This is how price works. And so you may be up $10, you may hit a pullback and your profit may go down to 3. The trade's still open. Then you may go up to $15. Then you hit a pullback and you may go down to 7. Then you may go up to $30. Then you hit a pullback and you may go down to 20. So just know that if you're in the market for a few hours, you just have to be able to withstand the ebb and flow, knowing that maybe you were in it for a 50 pip take profit. And with patience, you can absolutely get there. So yeah, I've been wanting to talk about that for a while, the pros and cons of scalping versus longer trades. And, I've had mentors in the past who stayed in trade for months. And I thought, wow, I don't think I could ever do that. And his reply was, yeah, but I'm going to have like 80 grand when I'm done. I said, okay, wow, maybe I could do that. Could you guys hold a trade for 80,000 for a few months? I found that quite amazing. All right, so let's go back to EU. And so we want to put in some support and resistance zones. And it's up to you if you want if you want to put your EMAs on first, excuse me, and sort of analyze your pair like this. And then as we get closer to looking at a trade, then we can add in our support and resistance. So this is always the number one question. How do you decide where to put your support and resistance lines? And the easiest way that I can think of is that you want to hit the bottom of the candles and you want to hit the tops of the candles. And you're going to find places where this line, for example, is both the bottoms of these candles. Let me add my arrow. And I can just keep the drawing tool on. So this line is both the support or the bottom of these arrows, but notice that it's the tops of these candles here. That lets us know that that really is an important zone. If the one line that you draw is both support, the bottoms of the candles, as well as resistance, which is the tops of the candles. So think of the floor as support. You're standing on the floor, you can't go beneath it. So this zone here is serving as support. These candles are standing on this zone. So this support zone is like the floor. But for these candles here, imagine you're standing and reaching up to touch the ceiling and you just can't go past it. So the height of these candles, this top zone is serving as resistance because the candles can't seem to go any higher. So basically that's what you're doing with support and resistance. You're marking the bottoms and the tops of your candles. And you can put 5 traders together and have them all mark up a chart, and all 5 will be different. Some like to mark a lot of zones. Others like to mark sparingly zones. So it's up to you. There's no right or wrong way. I'm going to add one more here. And notice that this wick here lines up almost perfectly with the top of this candle. So you definitely want to try to pick zones that are both support and resistance. That lets you know that it's pretty important. Okay, are there any questions? Put a 3 in the chat if you have any questions about support and resistance and how to mark these zones. You can click on it, right click. The trading view will work with me. Yeah, and here you can choose the color of your zone and how thick or thin you want that line to be. Okay, I think I see a question. Great. Trish is good. All right, so that's support and resistance. And, you know, I think we're 90% of the way here. We have our 50 and our 200 EMA. We have our zones. Now we can start making decisions. And, you know, when you're just starting out, if you're looking at a signal that was called and you want to analyze it, or if you're looking to take your own signal, then a good place to start is trading zone to zone. So what I want to add for this class is if you're comfortable with support and resistance and you're comfortable with your 50 and your 20, see if you can begin to add some trend lines. I love taking trades off trend lines. So what I'll do is connect this area here. And let's see if we have when you have two parallel lines, if price is falling between it, yeah, we have a nice little parallel channel there. And sometimes you may not see it. Just start kind of drawing your trend lines and trying to connect them. So even though this looks like it's in a bit of consolidation, taking a trade from the top of the trend line down to the bottom of the channel, these two parallel lines together, we can call a channel. And it looks like price rejected this trend line and is respecting it. And price may very well continue to buy on up. Now, I want to point out, I don't think I would take a buy here. Why? Because we have this zone that's only a few pips above. I would wait to see how price reacts at that zone and then either take it up to the next zone or sell it back down, depending on how it reacts. So you want to take your trades as close to the zone as possible, but to take a zone here, let me add one more zone below it, because remember, price loves to go back to its zone, and you need to find another zone so that you can know where to put your stop loss. So here's a zone here. So if I wanted to trade this from this zone to this zone, where we're 75% already to that next zone. So I wouldn't have a very good risk to reward ratio if I took the trade from this point, because where would my stop loss be? You know, there are a couple of choices about where you can place your stop loss. So some say, well, just go to the previous low. So you could put it here. And, you know, for stop loss, we're going to note that in red, and we're going to use a dashed line. So we could put our stop loss here, but knowing how price loves the zones, a safer stop loss is just on the other side of the zone. So if we were to do an entry here, and we're going to put our entries in blue. Let's make that a little thicker so you can see it. There we go. Same for our stop loss. Let's make that line a little bit thicker. There we go. So if we were to enter the trade here with our stop loss on the other side of this bottom zone, then our take profit, if we're trading zone to zone, I'll put it just a little above so that you'll be able to see it. And we're going to mark our take profit in green. So someone in the chat tell me, or come off mute, what's wrong about this trade? If we enter here at the blue, the green is the take profit and the red is our stop loss. What's off about taking this trade? Place it in the chat or just come off mute. The 50? Yep, that's 1 point, Mel. I hadn't thought about that. What I wanted to mention, and yeah, it is risky to take a buy when you're underneath the 50. Let's see. Yeah, Henry said it. The risk to reward ratio is not good. You don't even have to measure it out to know that your risk is it's almost double your reward. So when you enter to where your take profit is, and let me just type it in, this is your reward. Let's try that again. Text box. So this space here between the blue and the green, that's your reward. And the space between where you enter and where your stop loss is, that is your risk. So at best, no, at minimum, you want a 1-to-1 risk to reward. So the same amount of pips that you're going for, you want that to be your risk. Even better is to have a bigger reward and a smaller risk. But at minimum, you kind of want like a 1-to-1, and this risk is a lot bigger, almost twice as much as your reward. So that's another reason to visually say, I don't think I want to take a trade from this area. Now, something else that I want to point out, let's say we're at, so we decide not to take this trade. Let's say we're going to wait until price gets to the zone and make a decision. So from here, at this zone, price is at 1914, and to our next zone, 1964. So about 50 pips from one zone to the next. If that makes you a little nervous and you want to have like maybe a smaller trade, then add another zone. You can always look closer and find another point. So we can add in that zone. So now when price gets here, we can make a decision. If we see a break and retest, then we can enter. We can enter somewhere here based on how the candles, we don't know yet because price hasn't made it there yet. But we know we're going to have our stop loss just below the zone. And then our take profit is going to be here at the next zone. Now, our reward can be that much and our risk can be that much. That looks like a great trade idea. Of course, in terms of risk to reward, we have to wait until price gets there and see what it does at the zone. Any questions about trading zone to zone? Now that's a little different than trading off the trend line. When you're trading off the trend line, you're really looking to see how price reacts at the trend line. This, let me move the arrow, is a great indication of price respecting it. So we know it's not breaking through it. If it breaks through it, you want it to retest and then you can buy in the up direction. But because it really respected that red trend line, we know we're good for a sell and you can take it down to that next zone. It did that all in one candle. So in 1 hour, if you entered here, that's at 1984. You can take that all the way to 1964, 20 pips in 1 hour. Not bad. Likewise, if we look at how price reacted at this zone, which is also at the trend line, those are the best trades because price is respecting the zone, it's respecting the trend line. You can easily do a buy and take it up to the next one. Any questions, you all? Feel free to type in the chat or come off mute and talk and tell me, is this making sense in terms of how to analyze your pair and to look for trades? We're just going to stay in this zone kind of each week until, everyone can get really comfortable with it. What questions do you have? Any questions? Is it making sense to you? Good. Thanks, Trish. So, you know, get comfortable with the 50 and the 200 and marking your support and resistance. Then you can begin to look for trend lines to kind of take that next step if you're comfortable. Trend lines are extra. You don't have to trade off those. Um, I'm going to keep kind of introducing them and talking about them so that you have to kind of train your eye to see how to draw them. There's also, you can draw trend lines all over the place. You could do one here, connecting here. And sometimes it's okay if that wick comes through it. There's no perfect way to draw a trend line. Some would draw it here. Some would just connect the bottoms of the candles. Thanks, Henry. And so this is yet another trade opportunity because you want to see how will price react at this trend lines. I love, love, love trend lines. If price breaks through, then you look for a retest and you could sell it down to the next zone. If price gets here and respects it and looks like it's not going to break through, then you can buy it up to that zone. So you have your support and resistance, and that next step is trend lines. But definitely be comfortable with support and resistance first before you add your trend lines. But yeah, we'll just keep reviewing this and we'll look at more pairs next time and get really comfortable with this kind of analysis. Thanks, Henry. Glad to help. Glad to help. Sometimes Forex can seem so complicated, and I admit there's so much to learn. There's so many confluences and indicators. I'm amazed. I've been at this for years and I'm still learning. But it doesn't mean that we can't be profitable in the beginning stages. And that's why I think this trading view analysis is so important. We don't want you to feel like you have to be an expert at Forex before you can make your beginner trades. Absolutely not. Yes, Sharif. So there's a trend line here. There's a trend line here. Just, connect that there. You want to make sure it's touching the wicks. There we go. Then let's pull it down there. And you can do these trend lines on different time frames. So if I go up to the 4-hour, now we're really talking about a bigger picture. See, now that I'm on the 4-hour, I can, and lots of people will draw their trend lines and make them different colors based on the time frame. So if I want to connect it here, I can come all the way down like that. And so I used to have a system where my 1-hour trend lines, and I'll do TL for trend line. My 1-hour trend lines were black, and then my 4-hour trend lines were, I think, a light blue. And then I would do daily trend lines. They were green. And so the higher up you go, the more of the chart that you can see, and you can make bigger trend lines. And guess what? Let me delete this one for a minute. Now that we're on the 4-hour, when price is respecting a 4-hour trend, you can expect a nice trade, a nice movement, the higher up that your trend line is. But we can talk about this more next week. The hour is just a nice, warm, fuzzy place to kind of start. But you can definitely go up on higher time frames and get even an even bigger picture. All right, everyone. Any questions before we go? I'll work on this recording and get it posted tomorrow. All right. Well, good night, everyone, and happy trading. And we'll talk soon. And feel free to post your markups in the IOP study group or discussion group. And you just want to put the 50 and 200 on there, add your support and resistance, any trend lines if you're comfortable with that. But just take I don't want to say baby steps, but yeah, just take those first steps. It doesn't have to be perfect. Just give it a try. And oh, let me show you before we go. If you click on this camera, it takes it a minute. And when it's done, it's going to give us a copy button. Yeah, so I can click on copy. And now I can go to Telegram and literally paste the image of your trading view chart. So that's how you would actually post it to the IOP study group or IOP discussion group. Come up to camera, click copy, and then just go to the appropriate Telegram group and do paste, and it'll be a link and we'll see the actual picture. So that's how you can share your markups. All right, everyone. Well, I will get this posted to YouTube and I'll talk soon. Talk to you guys soon. Good night.